Hey everyone, welcome back to ASX Market Watch and charting signals around the world on all the world indices. We're looking at all the world charts as we usually do, just to determine which way 3 out of 4 stocks might be heading if we believe that 3 out of 4 stocks follow the overall index. But guys, a lot to get through. We'll just jump straight into it because there's a lot of exciting stuff happening around the world. A few trend changes that we really need to be aware of, and also a few of the things that we've said over the last couple of months are really coming to fruition. You've got to love that. So let's just jump straight into it. The Dow Jones, this is the chart for the Dow Jones, it's a daily chart. Obviously, what I said probably a couple of weeks ago was if the market breaks above this little high here, then the market would continue upwards. That would sort of be a short-term entry signal. And that's basically exactly what's happened. The market has closed above it, and the market is now taking off to the upside. What we said a couple of months ago actually was that the QE2 program from the Fed, from the Federal Reserve, stops in June 2011. And if we were to look at that, it actually coincides with our trend line. So our trend line and the Elliott wave target would be about 13,300 or around 13,000 to 13,300. So that brings us to around this level there. And basically what that means is the trend line is leading us in that direction. So it's highly probable that the market will make a turning point around May to June 2011. And yeah, so basically that's what we do need to look out for. If we're looking out for an exit signal, guys, it would be, let's have a quick look. Here's a really quick idea of an exit signal. There we go, a bit forward. Okay, it would usually be a little zigzag pattern down like that. So that's what we're looking out for, and at the moment we have not had that on the Dow Jones, so still upwards territory, heading towards 13,000 or 13,300 between those levels. So next is the All Ordinaries. The All Ordinaries is very simple again, guys. What we've got on the All Ordinaries at the moment is the strongest resistance level, which is the 50% retracement of our bear market. So here we go. This is our bear market from 2007 to 2009, and that is basically the retracement levels. The 50% retracement is the strongest retracement level, and you'll find the strongest resistance around that level. That level is 5,000 on the All Ordinaries. And so what that means is we've got a really strong level of resistance at 5,000. If the market closes above that, guys, above that level here, it's around 5,050 at the moment. If it closes above that, we could see really great gains from there. But at the moment, it's not looking like that's probable. In fact, if the market does close below this previous trough of 4,868, that would be our little zigzag pattern down, and that would be a short-term exit. Exactly. The next level of support, guys, would be at 4,700. So right here, where the long-term trend line is. As you can see, here's our beautiful trend line that will tend to find support for the market. So guys, that's something to be very wary of at the moment. The market is sort of traveling in a sideways range, as it has for quite a while now, quite a number of months, almost more than a year. We had a little bit of a gain here, which was just a great time to be in the market from August to about January 2011. August 2010 to January 2011, we got a good 10% move in the market, and a 10% move in the market can mean a great amount of gains in your individual stocks if you choose the right sectors to invest in. So yeah, basically that's what we're heading at the moment. I don't see any, unless it breaks to that upside, I don't see any particular great moves in the market on the All Ordinaries. And the next level of support, guys, is 4,700, as I said. So next, let's check out the FTSE. The FTSE has not been able to close above this level here. This is what we were looking for the, you know what's happening in the Dow Jones. As I said, it closed above that little pattern that I showed you, and then it went great guns. It went headed straight for the sky, so it headed upwards. What we're looking at now basically is the FTSE, and even around the world, the same pattern is unfolding, but the triggers haven't been triggered, if that makes sense. So as you can see, there's our level there, and I'll just get rid of that broadening wedge pattern. But here's our level here at around 6,070. It hasn't really been able to close above it significantly as yet. If it does close above that, or around 6,100, that would be a decent sign, and that would signal further upward moves on the FTSE in Europe. So until then, as I said, even though the trend is still definitely up, guys, so we've got a good amount of support at around 6,000, and then around 5,800 as well. So that's a great amount amount of support on the FTSE. However, that little trigger pattern hasn't been triggered just yet. Very close, but not just yet. Next, let's look at Asia. We've got the Shanghai Composite. Now, a couple of months ago, we called a short-term entry signal. Why did we do that? Obviously, very simple. We crossed our trend line, and I'll just get rid of all the... no, I'll leave them in there because they're very important, actually. This is a short-term downtrend line. And we've crossed it, had a higher trough and a higher peak. So basically what that means is that the market was supported by the buyers at this stage. So there we are there. Beautiful, beautiful. Up until then, we had a beautiful up move. Now, just really quickly, guys, here's our... I'll just get rid of that uptrend line. Here's our uptrend line here. This is our short-term uptrend line. Now, what we've got here is the market has actually closed below it, and it's also made that lower peak and gone through the previous trough. So what does that signal to you? It signals that the trend has changed, and also that the sellers have been supporting that move at that stage. So even though we've got a decent move out of that, we maybe got approximately maybe sort of 6 or 7% out of that move, which is not too bad for a month or a month and a half. And now the market has definitely tanked since then. So very, very wary to be something to be wary of is the next level of support, guys. This is our trend line support right here. It'll be about 2,830 on the Shanghai Composite in China. So at the moment, we've got a short-term exit signal. We've also got, guys, a short-term, medium-term downtrend. So this is a medium term going over about a year and a half. This is the downtrend, and as we were actually calling as well, guys, check out the ASX market watches previously. We did call this many months ago. The market would find resistance at around that level where that trend line is, around 3,100. As you can see, it tried to make it there, didn't quite make it, fell about 30 points short. But that's exactly what happens when you've got a lot of people selling at that level. So that's what we're looking out for. Again, it's not rocket science. Oh, it's fantastic stuff. But next we've got two more, just really quickly. The Hang Seng in Hong Kong. Beautiful chart, this one. It's crossed the uptrend line, guys. So what that means is that we've got a trend change. Has not been confirmed yet because the price hasn't been supported by the buyers just yet. We haven't been able to go through that level at around 24,500. What we've got instead is consolidation around the trend line. As you can see, a nice amount of consolidation here. Well, basically that happens very, very frequently, guys. The trend lines tend to attract consolidation. What I would say to you is that if we close below 23,460, see this previous trough here, that would be a short-term exit signal for me, basically. And if it closes above, if it gets out of this sort of consolidation pattern, that would be a nice upward move. So this is what we're waiting for the trigger on the Hang Seng. Again, it's kind of treading water at the moment, and it's the reason it is treading water is because it's sort of around that trend line. But if it does break out of that signal, expect a significant amount of gains from there. But be wary of course, of that little exit signal that could happen by that little zigzag pattern down. Basically, that's what we're looking for there. Last but not least is, we've got the Nikkei really quickly continuing its uptrend. Probably about a month ago now, we called a really short-term uptrend right here. Why did we do that? Because the bar started high, went down throughout the day, and closed on its highs, signaling buyers coming back into the markets on a short-term basis. That's exactly what's happened since then. We've had a bit of a consolidation since then, maybe even a possible exit signal there, except for the fact that it just wasn't a really big move. So basically, the markets can continue to consolidate, and now it's still heading up. So the market has sort of this still making higher peaks and higher troughs overall, which is great on the Nikkei, still remains in its short-term uptrend. What we're looking at for the Nikkei is if it closes below this sort of trend line and then makes a little zigzag pattern down, that's what you would expect for a short-term exit signal, but haven't had that yet on the Nikkei, so it's still looking good. Last but not least is the Bombay Stock Exchange. On the Bombay Stock Exchange, we called a short-term entry signal with this little zigzag pattern up. What we also said was that there would be a lot of resistance around the trend line level. What's happened? Well, basically the market continued up from there, and it found resistance at that downtrend line. So again, this stuff is not rocket science. It's played out exactly the way that we said it would. And what we've got now, just really quickly, because we've got this consolidation, we should be looking for points of support. So what we've got is a trend line. Our trend line support would be about 18,600. That would be a very strong level of support, guys. If the market breaks out above this consolidation pattern, expect a significant amount of gains from there because there's very little resistance from that point on. So again, the Bombay Stock Exchange is still consolidating around this level as it has been doing for approximately sort of 2 to 3 weeks now. And that's the markets from a chartist point of view. Again, we're looking at the charts and we've got so many things that have just sort of played out exactly the way that we would find. And just looking at the charts, just looking at where the support and resistance might be in the future, as well as combining them with tools, you know, other tools like Elliott Wave and that sort of thing. Great tools to learn and absolutely fantastic to look at the charts when you know this stuff as well, guys. It's such a fantastic pastime. Apart from that, happy trending until next week, guys, and I will see you then. Have a great week. Bye for now.